Good morning, it's Jonathan Barrett with the morning debrief. The current time is, oops, let's get that organised. Current time is 8:38, and this is the debrief for this morning. And just getting everything set up. There we go. Okay. Right, as mentioned, it's the 25th of November, it's 8:40, and what happened last night? Basically, relatively uneventful night. The Dow has closed down only 17 points at 10,043. The S&P, that was down just half a point at 1,105, and the Nasdaq Composite was down 6.8 at 2,169. So I guess if everything there just slightly negative. Some of the economic data we had was also not as robust as what we had expected, and just looking through it, you can see that the Conference Board Consumer Confidence came out at 49.5 versus 47.3 expected. But although that was a little bit better, we found that home sale prices were okay, but more importantly, the headline number for the night was in fact GDP, and that actually came down from the expected of about 3.2% to about 2.8%. So if anything, indicated people a little bit hesitant about the pace of the recovery, and naturally they took it out in the market. As you can see, just by looking at the S&P 500, and you can look at it here, it's just going sideways really. Tried to go lower, down to that 1,091, tried to break up the top. Look, whilst it's doing this, you've got to expect the fact that someday we can trade with the break. Obviously, if it takes out that low, then we're going into a deeper consolidation pattern. Likewise, if it takes out that high. So it is a low-risk trading opportunity either way, and I'd certainly be encouraged to take that either way as well. But what does that generally mean when we look at it in terms of the currencies, and what sort of lead will we have? Well, I mean, the currencies last night were pretty much in a range, and you can pretty much see that just by looking at what the Aussie did. Still quite volatile. But just to wrap up the closes, the euro's at 149.60, the dollar yen at 88.52, the Aussie 91.91, dollar Swiss 100.90, dollar CAD there 105.82. So as you can see there, things are pretty much in the range. Particularly when you look at the euro, it is stuck to a range on that, and I think there that you can see that, look, it's ready for a breakout. Having a look at this Aussie, you can see she's going sideways. Obviously a break through that area, that 90.50 sends it lower, and at the moment appears to be in the range. So I think we can really expect that Aussie probably might just tickle up a little bit more. There it is there at the moment. Still volatile, but if you are going long, stop goes under here, which is through that 91.30, or definitely under there. So that's good low-risk trading opportunities if you want to. I think one of the interesting ones to look at is the euro, US dollar, and also naturally the dollar index, which we all keep a very close eye on. But I think when you look at it, you can get a sense that we're approaching very, very major tops. And, you know, this is going to precipitate in the next leg for the US currency. And a lot of people are saying, well, let's see a breakthrough that 150, 150.50, and up she goes. Likewise, a breakthrough these lows here. So you can see that the currency market's in sort of a tender, in a range, and looking forward to breakout either way. And that's causing a little bit of frustration for all the traders at the moment, because we've been pretty much sidelined in these ranges. Trying to look for any lead, we're going to look obviously for the dollar index, see if we can get any sneak previews. But when you look at that, it's exactly ignoring that spike. But when you see that, you can see that she's just going sideways and testing those lows. One thing to note, the momentum indicators on the downside here, if we do get a pickup, then we can actually see that it should start to trade onwards and upwards from here. So, but just be guided by, as we said, we're really at an interesting point for the US dollar, for commodities, and for everything. So I'd be very close to it at the moment. One thing that also does happen, tends to happen around this year, we do get some normal dollar strength somewhere. It can be akin just to book squaring ahead of the end of the financial year in America, and those sorts of things I think are quite important. The trend normally is there. I think once or probably about 3 times over the last 5 to 8 years it's done that. So just be guided by that. That's just more of a seasonal thing. Okay, having a look at general commodities now. And crude obviously has come back. Once again, you can see there's a common theme. Hey, it's just going sideways. Now, it does look as if she's going to try and test that lower end, and it is right on an area where it can really break down to the low side. Once again, that's going to be economic confidence in the market. It's going to be something that says, hey, look, you know, things aren't that flash. Retailers this year, it's going to be pretty poor. All those sorts of things are going to cause a little bit of concern for those guys in terms of where crude will go. In a range, looking forward to breakout. I think the signs we would look for, if it does do that, is obviously a continuation through this level here. So you can be guided by a break through that 75 level, which you can pretty much see as solid support there. And if it does happen to break through that area, then you can see that she's going a little bit lower. That'll coincide with some data. We've got some important data which we'll go through in a second over the next couple of days. Remember also we've got Thanksgiving looming. Okay, now just generally having a look at general agriculturals across the board. Corn was under pressure, down 11 1/4 at 3.92. Cotton still remaining strong, up 1 at 75.52. Soybeans up 4 at 10.46. Just so everyone knows, we've taken profit out on those soybeans, and we've decided to stand aside the market. Wheat down 25, quite a large fall at 553.50. Chicago, Kansas wheat was down 24. So it looks like it's a mixed night for commodities overall. But generally, I think it's also come to a little bit of profit taking. As mentioned, we've certainly taken quite a bit of profit off the table in commodities because we're just not really 100% comfortable with how it's all trading. There's the wheat market. As you can see there, it looks like we're coming a little bit under pressure. That does suggest that we're going lower, maybe back to that 500 level. So stay pretty close to that. Just looking at soybeans, once again, hasn't turned over yet, but that could turn over, you know, sort of, I suppose, any day or so, but it has had a big high, and I think that's going to be a tough one to try and get through. So a little bit of a correction on that front. Having a look at industrial metals, copper, just up, basically just up a touch, nothing too major there. But we also took profits off the table in copper, and we're looking for a bit of a turnaround in some of the commodities. And so we just sort of feel that it was the right time to take something off. Why did we take it off? Just wasn't very happy with the fallout from the expected GDP growth in America and how that would be viewed. So if we can't go up, the chances are we go down. But naturally, the caveat is obviously if it takes up this high, then we do have an issue. And that high was up around about that 317. But at the moment there, we just feel that we're getting close to some form of correction. Gold's a handy little one, and I think worthwhile actually spending just a fraction of a time on it. The obviously option market went off. The last trading date was 2 days ago, and we haven't seen much of a reaction on that. And I think people are basically just holding on to positions, and we're just basically holding on to positions there. Let's see what happens. Everyone thinks there's a correction, and I think that the trading opportunity, and this could be something to keep an eye on. Now, it's a bit of a tricky trading opportunity. We know the market is long, okay? And we know that there'll be a rush to the door if people decide to take profits. And I think the trading opportunity is twofold. One, it's either on a break through these lows here at 1162, or more definitely on a break through that 1158. So keep an eye on those because, you know, it's going sideways. It hasn't told us yet. It hasn't told us yet that we're correcting, but I'd actually have a sleeper in there because when it does correct, as we know, it should go quite fast. As we look at those trend lines, it is a massive trend, and as soon as it breaks through that lower trend line, then you will see it come back. So if anything there, it'll be a rush to the door. So that could just be a nice little sneaky trade that some of our guys, if they want it, they're keen, and they understand the risks and the volatility in the market, then that's something they can look at. Okay, just quickly on the events calendar, what do we have coming out? Obviously, just have a look at that now. There is quite a lot of data that is due out, and that data, particularly in the States, let's just get that. Where are you? News, economic calendar, that's the one we want. Okay, particularly in the States, there's a whole raft of data out, and there it all is. Your personal income, durable goods, confidence, new home sales, and all the energy stuff. So widely watched tonight. Should be fun and should give us some lead, particularly with that durable goods orders, as to what's happening. In a nutshell, expect our markets today to open a little bit flat to lower, and probably expect some more profit taking in our local markets. That's about it from us. Hope you have a good day, and we'll talk to you soon.